Thank you for joining me. In this video, we're here to describe the benefits, the features, and the power behind my high close and low close doji candle patterns. They're considered to be an offshoot or a variation of very powerful, probably the second most powerful buy and the second most powerful sell signal. It's probably singularly, it's not probably, singularly, it's one of the highest probability trading setups you'll see. Not only that, but the way I wrote about it, and we published this in my second book back in 2005 titled Candlestick and Pivot Point Trading Triggers. It's a trading system, actually, and basically when you see a high close doji, which is after a downtrend in the market A defined downtrend. That was the key. At least 8 to 10 bars in lower trend price when a doji would form. Within 3 bars after the formation of a doji, the bar that closed greater than the high of the doji triggered what we call now the high close doji system signal. Your entry was on the close as it was closing or the very next open. Then your stop loss would go underneath the swing low or the lowest low the last prior 4 bars, as well as underneath generally the low of the doji. Your 1-to-1 risk, so using a 1-to-1 formula, so from your entry to where your stop would go, measure that amount, and the upside was a 1-to-1 risk reward ratio, would usually be achieved within 8 to 10 bars. And that's the system. It would teach you when to get in, where to place your stop, holding period, and first primary profit objective. That was the power and the nature of why I still to this day use the high close doji, and am proud to have this a part of the HGSI software community. For starters, it's one that we can run scans, which is amazing, and the feature, since I will tell you that most high close dojis that we see nowadays, it's the next morning session on a daily chart. Usually we see gap higher opens. So what we want to do is 15 minutes, if you're using a 15-minute chart or a 60-minute chart or an intraday or an end-of-day chart, is just a few minutes before the close of the market. If you refresh high HGSI software, it will calibrate and it will share with you what is currently going to form or is at the, let's call it, threshold of forming new buy or new sell signals with the HCD signal pattern. So in this case, this is a couple of things that we look for as if you examine other videos, especially in Person's Market Catcher. A market that's in a lagging condition is described as it's more than likely in a downtrend, right? Because it's lagging relative to the overall S&P 500. I'm not really sure who TD Corporation is, but as we can see, internet-based services. They did form a daily high close doji, so let's click on this. And as you can see, TD Corporation has now populated. So as you can see at the top left corner, this window box tells you all about the conditions of this particular stock as it relates to the person indicators. And yes, it says we are in a high close doji, and I guess you would consider this to be in a downtrend. So the criteria has been met. It is in a downtrend. Here's your dojis, and the market closed greater than the high of the doji. What's interesting about this particular setup is that the old swing low, so if the market went down, had a reactionary move to the upside, this is a swing low. Then the market has moved and made a newer low. So as you all see, the secondary lower low where we've just formed a high close doji, you'll notice that the PMC indicator has almost a higher low reading, thus describing a potential bullish convergence pattern. So this is an interesting stock, and then what's also interesting is this little dotted line up here that you see is the sector group, and you can see it's in an uptrend. So perhaps this stock has lagged its sector but is now starting to show signs of an upside. And you can make determination all by finding a high close doji and examining the conditions of the market based off the warehouse or the scan reports. As we go up and down, we could see United Natural Foods another one that generated a daily high close doji. And we can take a look at this stock and say, well, the sector's not doing much, the sector group itself, but it is in a daily high close doji. The relative strength performance versus the overall markets, I don't know, this doesn't really excite me. It's in a solid sideways trading range. Nonetheless, we can still collate and find different buy signals. And if we simply just go to high close doji and go to the top, now we can kind of filter out what generated high close dojis, what didn't, what's the more higher probability buy signals, and look to see if in fact there's other criteria, whether it's not just the PMC indicator, relative strength. We can all look to see what these stocks are and what sectors they're in. So as you get to use the high and low close doji strategy system, it doesn't just give you an idea that there's a buy signal. The high close doji also tells you what the holding period and what to expect as far as a risk reward ratio for immediate results. And as I've mentioned earlier, your holding period for that 1-to-1 risk reward ratio from our backtest studies is between 8 to 10 bars. So if you're running this not just on a daily basis, but you could be running weekly high close dojis, which many of you are familiar with another individual that uses HGSI that is popularized, and exclusively a lot of his trades have all been used by burst scanning for high close dojis on weekly and monthly basis. And this is why we're excited to bring this into the HGSI community. Many of you have seen this work before. With that said, it's very powerful as well as reliable. And just remember, not all trades are 100%, and that's the value of this high close doji system. It actually helps tell you where your stop should go. So here I'm going to go to a widely held name. It's called Walmart. Most of you are familiar with Walmart. And we'll look at the high close doji relationship that we have seen. So the high close doji, if we hit F5, and it hasn't updated for February 10th, but that's all right. You can start to see that the relative strength is starting to improve in Walmart stores, and we have a high close doji, but it has not had the follow through that we would normally see. But here's your high close doji, and your stop loss would be placed, as I mentioned, underneath the swing low or the lowest low of the last 4 bars. So with this said, if you wanted to get into that stock, your entry is here, your stop loss goes underneath that low, and we should see, at least on a 1-to-1 risk reward ratio, the measurement distance between the entry and the low where your stop would go. The 1-to-1 risk reward ratio would target, as you notice here, approximately, what would that be? About a 120, a move up to 120. So that would be right into that zone for if this daily high close doji materializes. Otherwise, you know where your stop loss would go underneath the swing low. Thank you for watching, and I know that through the weeks and months ahead, we will be conducting more and more updates and videos on how to use this particular tool and the power behind the high close doji system, as well as the sell signals of the low close doji, which are quite the opposite, which means after an uptrend, when you get a sell signal, as you can see, there was a low close doji setup right here. Here's your doji, and for those that aren't familiar with candlestick patterns, a doji is simply a market where it forms a high, a low, and the market closes right where the market opens and forms a cross. They're very distinguished patterns right here. And so when a market closes, and this bar did, below the low of the doji low, the stop loss would go above the highest high of the prior 4 bars, or the high of the doji, which is right up here. And using a 1-to-1 risk reward ratio, you should see that objective met within 8 to 10 bars. So that's a system that one could use. And if you say, well, listen, the 1-to-1's not really what I'm looking for, great, but at least you would have an idea that this is not the stock that's generating a buy, and perhaps maybe if you're so interested in buying the stock after seeing a low close doji, wait for the retracement. So there's several ways to play it. A, avoiding bad long entries, and B, knowing if it is going to go down, what would be the minor objective, at least for the market to pull back into support after a low close doji pattern has been established. Now, higher the time frame, remember, if it's a weekly chart that you get a high close doji, it's 8 to 10 weeks. A monthly, 8 to 10 months. So all of that statistics is very relevant for higher time frame trade setups as well. Thank you for watching.